was going to weaken. That's exactly what happened here. The US-Japan, surprisingly enough, was one of the better trades the entire week because it continued to move higher. We got all the way up towards this 93 level, and then subsequently we've closed at 91.89. Now, what I do want to point out here is 91.89 is the highest close we've had in the yen in weeks, so it's still a good move. So let's have a look. What have we got here for our 18-day predicted moving average? We've got 91.62, 91.57, and 91.97. My opinion is we stick with our buy positions on the dollar yen. Now let's go into, again, we're going to go into the daily report and see if we can pick up a price. 91.20 is the suggested low. We may push a little bit below that, but for now I suggest we start the week with buy position on the yen on a dip. 91.20 is the first area we want to look for entry points. Predicted short, medium, and long-term differences, all positive. Everything looks good there. So with all of that looking good, you know, even though we're going to experience some volatility again in those equity markets, I think the yen is still a good buy on dip, and we're going to stick with that to begin the week. And we're looking for basically what we're doing is we're looking for a sustained break of this 93 level and a push back up into this 95. Now you can also see that we've got a pretty strong base here around this 89.50 level. So we can't rule out this week that we may push down to that level. But again, we want to open up our stops a little bit, take maybe half the size of the position that we normally would, and allow for this volatility and get into more of a, you know, a position trade here and wait for this bounce higher. And again, I see some very good opportunity on that. Now, going into the New Zealand US dollar, we've got a very mixed picture here. We've got the predicted MACD is kind of sitting flat right now. The predicted true strength indicator, though, from Vantage Point, also supporting long positions here. We've crossed over to the upside. It's suggesting we're getting into, again, this is an indicator that's saying it's oversold. So the problem is the predicted medium and long-term differences are not really in complete agreement. They have room to extend lower. So as an early warning sign, the predicted true strength indicator is saying that we're probably going to get a bounce, but I think we could see a little bit lower. We could see a push even back down into this lower 66 area before we get the next leg higher, which hopefully we would look to see it retake this 69 level. But again, the start of the week, I see New Zealand US is a flat trade. I don't like it right now. We'll revisit it midweek and see where we're at. But for now, my bias is, again, because I'm looking at US dollar weakness, that I would still prefer to buy New Zealand US on a dip, providing 65.50 to 66 this area holds and the equities begin to recover. The New Zealand dollar and the equities, extremely high correlation. So if those equities do not recover and we're not right and they continue to move lower and possibly even break through that you know, the 10-20 area, then we've definitely got a problem here. Now we're going to be going in looking again at Euro US and the Euro futures contracts. Very, very similar here. So what I see happening with this, we've got this predicted true strength indicator from Vantage Point is crossing to the upside. So again, there's a slight upward bias here because of the fact that this thing is extremely oversold. It's been a great call from Vantage Point. We can see right here this crossover on the triple EMA move to the downside. That coincides with the predicted true strength indicator. You can see that both indicators, they move together. Now again, this predicted true strength indicator has crossed over to the upside twice here. It's moved a little bit lower, it's moved higher, but then you can see when it crossed the predicted true strength indicator right here, the market did move up by about 400 pips, but it hit that 18-day predicted moving average right there like a brick wall. It just crashed right back down. So we've got a minor crossover on the predicted true strength indicator, but now it's recovering and starting to push up again. So it's warning us, again, basing that around the potential with the US dollar at the US dollar index at multiple year highs, seasonal highs. Everything points that the euro weakness is potentially very, very limited. So it's important that we keep that in the back of our mind whenever we're getting in too heavy. You know, again, the one-sided trades you want to be very, very cautious of. Now, looking at the Aussie US dollar, our final pair here, the Aussie US dollar again hitting resistance with this 18-day predicted moving average. The reason why I have the 18-day predicted moving average up here with the triple EMA, because it very clearly identifies short, medium, and long-term support or resistance, and in this case it's obviously resistance. So what we've got, again, the predicted true strength indicator crossing over to the upside, predicted MACD somewhat flat. So again, the medium and long-term differences are turning from negative to positive. So everything in the presentation this week is warning that the US dollar strength this week is likely to be somewhat limited depending on what happens with the equities and the Eurozone and everything else. So I would suggest in this particular case, looking at Euro US, again, Euro US a high yielder. The market wants to get into the carry trade, and the best way to do that is to buy Australia US, Australia Japan, Australia Swiss franc, that kind of thing. So 82.20 is the low, 84.03 is the high. Very mixed picture on the predicted short, medium, and long-term differences. Now, looking at the close, we've got 82.35. So with a close of 82.35 and a predicted low of 82.20, you can see that the Vantage Point software does not see a lot of downside potential on Australia US. And by looking at these multiple indicators, it's painting a picture for us. So, you know, if Vantage Point here, for example, it had the predicted low at 81.10, then that tells me the program is picking up on the commodities, the equities, and all the other things that are happening, the treasury yields, a number of things that the program looks at, and is saying the Aussie dollar has some real weakness ahead. Well, it's not saying that. It's not saying that at all. It's saying that the downside actually is going to be very, very limited. Now, the way I view that is that we're also going to see some strength in the commodities because of that. So all of these things we certainly want to take into consideration in doing our analysis, and that's the beauty of the Vantage Point program, that it looks at all these things. So that is our Forex market, or Forex weekly outlook, I should say, for the week of June the 7th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.